I'm Akshi Bahugna, and together we'll be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. Both the numbers are flashing on your screens right now, viewers. And on the show, we are joined by Rajesh Sinha on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen.
Good evening, Himanshi and Malika.
Good evening. Now let's get started
Very
with the
good
show.
evening to all of you.
So first, we'll cater to first WhatsApp query written to us from Mumbai. So Josh holds 100 shares of Chalet Hotels at 766 rupees, and he hasn't mentioned the time horizon. So I'd like to take both the technical and fundamental view on it. Firstly, I'd like to come to you, Rajesh. So how are the fundamentals of Chalet Hotels looking like? Are they promising?
Yeah, if we talk about Chalet Hotel, the fundamentals is very promising. The company has done a lot of growth in the number of rooms as well as number of hotels, and same thing is reflecting in the revenue also. The quarterly revenue is for the fourth quarter is very promising. 522 crores they have done. However, the PE is slightly overvalued. It is currently trading at 136. So the cautious approach we can take. But looking at the hospitality sector, the sector is very promising. So the company is very good. So the investor can keep invested in the Chalet Hotel.
Okay, got it. And Sundar, very quickly asking you about the technicals of Chalet Hotels as well. How does it look? Do you see any strength in the near term, because it seems to have taken a hit recently?
Yeah, so Malika, I mean, if I look at a daily time frame, the stock pattern is promising to me. There is a clear sign of uptrend in this stock, and if you see the 14th May action, the stock has given a positive breakout above its previous resistance at 885. So I am bullish on this stock, and if there is a kind of dip in this stock, then the dip should be bought, and the target for this stock should be at around say 1000 odd levels. And apart from this, if I talk about the technical indicators over here, moving averages, the prices are trading above moving averages, which is a classical sign of an uptrend. And apart from this, talking about the RSI daily RSI is at 58. So yes, this stock still has space to go upward.
Okay, got it. And we will quickly take up another WhatsApp query as well. Rajendra from Bangalore has written to us asking that he holds 600 shares of EMIL, Electronics Mart India, basically at 208 apiece, and he's asking simply whether to hold or sell his positions because he has made a loss of about 50,000 via this investment. Now, Electronics Mart India has fallen significantly from Rajendra's buying price. Therefore, I'd like to ask first, technically speaking, Sundar, how does the chart look like? Because say from the last 1 year, the share price only has significantly fallen. What kind of technical indicators do you see in place for a potential uptick maybe?
Malika correctly said the stock has beaten left and right previous year, and apart from this, there was a kind of positive push by buyers from 21 April, but the positiveness was not followed through, and I could see that the breakout was failed. And apart from this, I could see that the pattern doesn't look promising to me. If any rise at this stock would be a good exit for me. And if the viewer wants to add this stock, right, so the breakout level is far away. I mean, it is at around 160 level. So I don't think so that it is a good a stock to hold.
So thanks for that view. Now let's go across to a caller joining us from Hyderabad. Hi Suresh, good evening.
Hello.
Yes, how can I help you on the show today? Suresh, are you there on the phone line?
Yes, I am in.
Yes, please go ahead with your query.
So I am holding 40 shares of UTI AMC at the price of now 1030.
Yeah.
So I have been seeing this one, and from past 3 days it has been consolidating there. I am suspecting that this is a resistance zone.
Yeah.
So is it good to exit now and enter it in a lower level, or I can hold it for 6 months?
Okay.
So what is the strategy where I can follow here?
Understood. So, Sundar, coming directly to you. So, what sort of strategy do you advise Suresh, with the UTI AMC? Because currently it's trading at 1175. So, since the stock is in a consolidation zone, so what suggestion do you have there?
So, Himanshi, first I would like to narrate the stock. The stock has made a high of around 1,393, and the stock was beaten left and right, and it has made a low of 900. Now, correctly said, the stock was into a sideways range, but if you see the 16th May action, the stock has given a breakout above its 200 DMA. So, if I would like to suggest some strategy, then this could be a good buy on dip candidate for me, because 200-day moving average is doing a very good and very strong supportive role over here. And if the stock price crosses above its recent high that was made at around say 1,200, then the stock could further skyrocket and it could reach the target till 1350. So I'm bullish on this stock due to its 200-day moving average.
Understood. And now we have a caller called Amol joining in from Noida. Hi Amol, good evening.
Good evening.
Please
Actually,
go ahead.
I am holding 80 stocks of Protean eGov,
Okay.
and my buying price is 1030.
Okay.
So I need a short-term view on this. What should be the target? And I also want to know, like, they just missed one contract from Income Tax Department PAN 2.0 project.
Correct.
So does it impact very badly to the company that the stock has plummeted by 30% in last 2 days?
Right.
Yeah. And can it hold this 980 support?
Okay. Understood your question. Rajesh, I'll actually be taking this question to you. Our viewer from Noida currently holds 80 shares of Protean e-government technologies at 1030, and the stock price has fallen. In fact, it also came up with a weak Q4 number, especially because of losing this contract from the IT department on grounds of the PAN 2.0 project that was a major contributor to its profit. Now that's gone, how do you see that impacting Protean e-government's financials and thereby also the stock price?
Yeah, so you are correct that the project is gotten from a Protean, and the IT department is major revenue contributor for the Protean. So the impact is very severe for the company, and in fact we can see the same thing in the stock price also. In last 2 days it is corrected by more than 30%. So my view that the company may not recover because the major contract is gone, and the impact is severe. So it's my advice, the client can book the losses and look for some other opportunity.
Okay. Just very quickly to Sundar as well. Sundar, how does a technical look like, and for especially anybody who's holding shares of this, how should they go about their investment? And just a quick note also to you viewers that our show Know Your Company had Protean e-government's Managing Director and Chief Executive Officer Suresh Sethi here, and he answered a lot of questions that you might be very inquisitive about, so do go and watch that episode. But anyway, Sundar, give us your technical perspective, and where do you think the charts are headed from here on?
See, Malika, first of all, the chart is into an trajectory zone, and I could see no more data over here. But yes, if the viewer wants to place the stop loss should be placed near the recent low, which is at 980 level. Apart from this, there is not much to say about this stock.
Okay, so thank you so much for that view. With that, we have a WhatsApp query. Harsh from Bikaner holds 105 shares of ITC at an average cost of 426, and he's looking for the stock performance if he wants to hold it for 2 years. So, and he's also looking for the right levels to accumulate more. So firstly, Rajesh, I'd like to come to you. ITC came out with its Q4 results, in which it has logged an exceptional gain of 15,179 crore rupees. And, the net profit has also rose marginally in this Q4, and revenue has risen 10%. So keeping these numbers in mind, what's your holistic outlook on ITC for long term?
See, for long-term, ITC is very promising company, and you are correct that the recent quarterly numbers are very good. Uh, uh, Revenue has increased by almost 10%, and profit margin is also improving. Company is into cigarette business and hotel and various FMCG. So, looking at the consumer perspective, the consumer is now spending more on these things. So, the long-term view is promising, and I advise the investor to keep invested in the company.
Thanks for that view. And Sundar, I'd like to know from you that are these the correct levels to, accumulate more?
Yeah, Himanshi, I think so. It is a good level to accumulate. Now, the reason for accumulation at this patch is that there is a strong support of medium moving average, which is 50-day moving average, and I could see that there is some kind of push by bulls which has been occurred in today's trading session. So I think so that this is a good price to accumulate. And apart from this, if the stock price jumps above the 440 level, that where the recent highs are made, and the 200 DMA is somewhere placed around that level. So if the stock manages to cross above this level, then yes, I would not be surprised, Himanshi, to see the stock price trading at 470 level, which is the major resistance.
Okay, understood. And now we have Dheeraj. He is on the phone line from Hyderabad. Hi, Dheeraj. Good evening.
Good evening, ma'am. I would like to invest to 6 lakhs, ma'am.
Okay.
Is it better to invest either in power stocks like NTPC, Power Grid, or REC and PSC at current levels, or there is a news that like the coming months would be good for metals, like for Hindalco and Nalco, sort of.
Right.
Or is not both of them something like something in the EMS space like PG Electroplast or Dixon? I would like to know some stock recommendations, ma'am. Actually.
Okay, and you have
any 3 counters which would be a decent upside for the next 3 months from current levels is my query, ma'am.
Okay. So a very broad question. Let me narrow it down. But before that, Dheeraj, you have a corpus of 6 lakh rupees, is it?
Yes, ma'am. I would like to invest in 3 to 4 stocks for a decent upside from current levels, ma'am.
Okay, let's see what our experts have to say about that. Rajesh, tossing the question to you. Dheeraj from Hyderabad currently has a corpus of about 6 lakh rupees, and he is very interested to invest in the stock market while keeping his investment diversified. He is eyeing maybe a suggestion on 3 to 4 stocks or sectors perhaps that you may seem could be profitable. Now, he was more interested in the metals space and the power space. Now, the power sector is undergoing this transition towards cleaner energy resources, and the metal space, especially the demand for steel and aluminum, is also picking up, seeing the infrastructure boost in India. How do you see these 2 sectors, and would you be able to give us a couple of names?
Yeah, so for power sector, the requirement of the power is increasing day by day, as well as the government has kept it 30 gigabyte target in renewable energy. So the power sector is in very good hand, and most probably in 1 or 2 months the cabinet committee is also meeting for the power sector, and so the more order is about to come to the power sector's power companies. But my preference will be on more on renewable energy, because cleaner energy is in a major agenda for the government. So they can the investor can invest in NTPC as well as the KPI Green, also looking promising. So these 2 in power sector. And in metal, due to the recent tariff war, the metal prices have corrected, and we feel that the metal prices have bottomed out. So from here, the metal prices is about to increase, majorly due to the infrastructure development in India, as well as demand from China also increasing. So metal prices is about to increase from here. So metal also looking good. So Hindalco is one of the company he can choose. Zinc, Hindustan Zinc is also looking promising. Hindustan Copper is also good. He also asked about EMS segment. So EMS segment is no doubt it is trading at very higher valuation, all the company, majorly because the opportunity is very high. So those companies are always trade on a higher PE, but looking at the growth prospect, Dixon is very good, and Amber is also looking promising. Dixon has recently given the quarterly numbers, and for FY26, the revenue growth target has been given by more than 40 to 45%, and revenue is about to increase, about to double from here in next 2 to 3 years, majorly due to the capacity expansion. Similar thing we have seen in the Amber, also in Sigma also. So I suggest him to take one from metal stock, two from power sector, and two from EMS.
Yeah. So
Yes.
sorry, we're getting another caller very quickly. Chandu from Hyderabad on the phone line, and my colleague Himakshi will take up that.
Yes, hi Chandu, good evening.
A very good evening.
Yes, how can I help you on the show today, Chandu?
Yeah, madam. Good evening. I have a Jupiter wagon
Okay.
around 800 shares.
Okay.
At price of 457. I want to know the short term and long term view. of
Understood,
this. And
understood.
can-
Okay, I'll get your query answered. You're sitting on a loss of over 45,000 is what I can see, Chandu. And Rajesh, talking about the fundamentals of the company, so talking about the order book, it stands at 6,301 crore as of, March 2025. And the company is also, expanding in Odisha. And it has targeted 800 crore in revenue also from the wheel sets and brakes. So keeping all these things in mind, the Q4 results didn't really, went well for the company. The net profit was down 1%, 1.8%. Revenue was also down over 6%. So what do you have to say about the fundamentals of Jupiter Wagons? Should the investors stay invested in this counter for another 2 to 3 years? Are you positive?
Yeah, I am positive on Jupiter Wagon. Why? Because the capacity expansion is there, and they have set a target of revenue growth. If you talk about the quarterly numbers, why the number has come down? Because if we see the order from the railway, after June, the order is coming little on a slower pace. Earlier, the last year, if you see the order from the railway is much higher, because the government emphasis was very much, and now the railway stock has given good uptick in last week. This week it is not very promising. Why? Because one meeting was scheduled last week, but the order is what we are expecting. That order has not come, so that we have seen the railway stock is correcting little bit. So if we talk about the Jupiter Wagon, the company is very promising, because the company is in rail freight, which and for Vande Bharat and all the trains, government is required a lot of wagons. So the company is very good for almost 2-3 year investment point of view.
Okay, got it. And now we have another caller, Ashok, joining us from Hyderabad. Hi Ashok, good evening.
Yeah, good evening. Just I wanted to know, is it right time to take an entry in RateGain?
Okay, and why are you interested in
For
RateGain?
6 months to 1 year. I have been seeing this one, and it's reversing from the lower level, and from past few days, it's showing a strong candle where I'm seeing technically. So I'm expecting at the same time it is trading about 20-day and 50-day moving averages. So and at the same time it is way long to see that 200-day moving average. So is it right time to take an entry to for 6 months to 1 year to reach that level?
Okay, understood.
At the same time, it is a tours and traveling sector, right? So that is also one more reason.
Okay, got it. So, Sundar, I'll take this question to you. Ashok from Hyderabad wants to know whether this is the right time to enter RateGain, especially because he has reasons to believe that the stock price is recovering. What does your expertise say?
Yeah, even I think that this is the right time to enter the stock. The reason for this is that if you see from mid-March, the stock was into a tight consolidation range, and on 19th May, the stock has given a strong breakout plus rising volume. And apart from this, if you talk about the technical indicators over here, the RSI is showing me that this stock has the potential to go up. And apart from this, talking about the 200-day moving average, which is placed at around 646. So the disparity between the current market price and the 200-day moving average is far. So it is a classical example of a mean reversion trade. So yes, this stock is a good counter to watch out.
So thanks for that. With that, we are joined by a caller from Jaipur. Hi, Pratul. Good evening.
Good evening, madam. Thanks for taking me on the show.
Yeah, please go ahead with your query.
Yeah, my query is around BSE Limited. I purchased 1,000 shares of BSE Limited at around 3,000 rupees a year back.
Yeah.
Now, until now, the share had been rising consistently, but today it had declined by 300 rupees based upon a negative trigger that is coming.
Yeah.
So tomorrow would be the exponential rate for this counter.
Yeah.
Now, taking all these factors into account, should I exit the counter post the exponential rate, or should I continue to stay invested in?
Okay. And,
And
when
my-
you
and-
initially
and my-
bought BSE, were you planning to hold it for like 2 to 3 years?
Yeah, I can hold it for a long term basis. Not an issue.
Okay. And firstly, congratulations, Pratul. You're sitting on a handsome profit of almost 40 lakh rupees there. So congratulations to you.
Thank you, madam. Thank you very much.
Yeah, and I direct this question to a fundamental guest. So Rajesh, what's your sense on BSE, and what should Pratul be doing with his, great profits that he's made with the counter? In the near term, is he going to make more profits, or what suggestion do you have?
For BSE, I am also very bullish on the counter. Why? Because the company is on a duopoly thing. So only BSE and NSE is there. Why it is corrected today? Because of that thing that NSE, the SEBI chairman has said that all the document is on a reason to it is cleared. So because of that little downside we have observed today, but on a longer term, the stock has good potential. The correlation for BSE NSE is like that if the market is on a increasing side, the number of volume will increase, the number of investor will increase, and because of that their profit and revenue will going to increase. And we are in a very nascent stage of the bull run. Still, I can say for next 2 to 3 years we can expect today. Morgan Stanley has also given 1 lakh Sensex target for next 1 year. So all these things will help BSE to gain. So my advice for the investor to keep invested in the BSE.
Okay, and now we have another caller, Devraj, joining in from Bengaluru. Hi, Devraj. Good evening.
Hi, ma'am.
Please go ahead with your question.
Ma'am, Varun Beverages,
Okay.
300 quantity, average price of 550.
Mm-hmm.
3 months in consolidation, ma'am. Reliance Campa in Varun Beverages, ma'am. Old or sell, ma'am.
Okay, got it. So again, taking this question to you, Sundar, our viewer from Bengaluru currently holds 300 shares of Varun Beverages at 550 rupees a piece. The stock has fallen to 475. And I think he meant to say that it belongs to a very competitive space, because carbonated drinks has a couple of players and a very strong market share, each one of them. How do you see the technicals of the chart, and do you think the stock price would recover and go beyond the price at which our viewer bought them at?
Yeah, so Malika, the stock chart, I mean, the chart doesn't look that promising to me. If you see from 17 April, the stock has given a sharp correction. And apart from this, there was a strong resistance at that level itself. So, the stock is continuously making a kind of a lower low pattern in micro charts. And I could see that there's an important support at around 455, which need to be tested coming few days. So I would say that the stock to be at hold, and if the viewer wants to place, I mean, I would suggest him to place a stop loss below 455 levels on daily close basis. If the stock price closes with this level, then we should exit the stock, because then there will be a classical example of a rectangle pattern breakout and further the stock could fall. So I would say that the stop loss should be placed at below 455 levels.
Yes, thank you so much for that view. With that, we are joined by a caller from Rajamundry. Hi, Mahinder. How can I help you on the show today? Mahinder, are you there on the phone line?
Yes, yes.
Yeah,
Very
please.
good evening.
Good evening.
Yeah, actually, in the recent fall, I have purchased some 15,000 shares of ONGC at an average price of 227.
Yeah.
So, but yesterday that means the ONGC announced the result where I am seeing some revenue is surpassed, but the profits were not up to the mark because of some extraction cost more.
Yes.
So my view is for long term whether this may impact in the next quarter.
Okay. Yeah. Absolutely. So, but are you looking for a short-term view, right? Just next
Yes,
quarter
short-term,
view.
short-term.
Yeah.
Yes,
Okay.
next quarter, short.
Yeah. Okay, understood. So, Sundar, coming to you on this front, rightly pointed out, ONGC came out with its quarter four results and the net profit was down over 21%, which is really not good for the company. But is it going to impact the counter, in the next quarter as well? Are you seeing a dip? What are the charts suggesting?
Yes, so Himanshi, I could see on chart that in today's session the stock has fallen sharply, and it was a kind of intense selling which has happened, because if you see the candle and compare it with volumes, it is a kind of blend selling, and I could see that the stock has taken a support of 50-day moving average. Now, coming to your question that the stock could dip more, so I think so. Yes, the stock could dip more till 220 levels, and there itself the stock could hold on to some kind of support, because that is the level where the previous supply demand zone is made. So I think so. Yes, the stock could dip till 223 levels.
Okay, got it. And now we have Teja joining us on the phone line from Nellore. Hi Teja, good evening.
Good evening, ma'am.
Please go ahead with your question.
Ma'am, I have 6,000 shares of Trident at 50, madam.
Okay.
Can I hold them for next 10 to 15 years to get multiple returns, or can I exit whenever I get my buying price?
Okay, and since when have you been holding these 6,000 shares?
I have been holding from last 2 years.
Okay. Got it. Very interesting. Rajesh? Yeah. Okay, sorry, we lost him. Rajesh, I'll take this question to you. A viewer from Nellore currently holds 6,000 shares of Trident at 53 rupees a piece, and the stock has dropped about 20 rupees per share to about 32 currently. And I think he believes in the fundamental story. That is why, despite sitting on a loss of over a lakh, he's willing to go ahead and ask you whether it would be a good idea to stay invested for the next decade or so. Now, Trident has fallen 40-50% from its all-time high, but the Q4 results were good. What's your take, and what would your suggestion to our viewer be?
See, the Trident is basically into yarn, towel, bedsheet, paper, chemicals. So we have seen some textile company is gaining, and if you talk about the FTA agreement with England, so there also the textile is on a major focus, and we believe that this sort of company like Trident, they have given a good amount of revenue growth also in the past, and consistently the margin is maintained at 13-14% in last 8-9 quarters. So this company has a good potential. If the investor want to hold for more than 2-3 years, they may book into a good handsome profit.
That view, Rajesh. Now with that, we'll have to slip into a short break. Keep sending in your queries, viewers, on WhatsApp and call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands.
Welcome back, viewers. You're watching Ask Profit on NDTV Profit, and I'm your host Himakshi Bahugna. Along with me is my co-host Malika Mishra, and together we'll be taking up all your stock-related queries. But before we proceed further with the show, viewers, news coming in about rebalancing in BSE. Changes will be effective from June 23. Now, the key highlights seem to be Nestle and IndusInd Bank's exclusion from the Sensex. To tell us more about the inclusions and exclusions in the BSE, we have my colleague Agni joining in. Agni, over to you.
That's right. So there has been a rejig announced in BSE indices. So first of all, big news, the IndusInd Bank and Nestle are out of the Sensex, and Trent and Bharat Electronics are in. Now Sensex is the top 30 companies on the BSE by market cap. Next in line is the BSE 100, which is an index of the top 100 companies in India. Now the companies that are out of the index are Bharat Forge, Dabur and Siemens, and the companies that have replaced these are Dixon Tech, Coforge and Indus Towers. Now Sensex 50, which is the top 50 companies of the country on BSE, have also seen a rejig. Now Britannia and Hero MotoCorp are now out of the index. In their place you will find Interglobe Aviation and Shriram Finance. Now Sensex Next 50, which is the other 50 companies after Sensex 50, they also have seen quite a few changes, but some of the names are repetitive. So Interglobe Aviation is out, Shriram Finance is out, Bharat Forge is out, Dabur India and Siemens again. These are the companies that are gone, and in their place you will be seeing Britannia Industries, Dixon Tech, Coforge, Hero Moto and Indus Towers. Now in BSE BankX also there has been a change. Now BankX is a list of top 10 companies in the banking sector. Now the company that has gone out of the BankX is Canara Bank, and in its place is IDFC First Bank that is coming in. Now these changes will be reflected on the indices on the opening of June 23rd. That is a Monday, and inflows are again subject to change going forward.
Right. Thank you so much for bringing in those details there, Agni. And with that, I'd like to also go across to my guests. Rajesh, what do you have to say about this development? Trent and BL have been included in the Sensex, and Nestle and IndusInd Bank have been removed from the Sensex. IDFC First Bank has been included in the BSE BankX, and Canara Bank has been removed. So what do you have to say about this development coming in?
See, index is keep changing their constituent time to time. Why? Because some company doesn't perform, so it will not give a clear picture of the entire market. So index is basically a benchmark for the entire market. So these companies which have excluded are not performing good in sync with the other company. BEL and Trent has given good amount of correlation with the other company. So because of that, these two companies have been included in the Sensex. And similarly in other indices also there are some reason happened. So it is means every time the index is reaching. Like,
Understood, understood. With that, thank you so much for that. And with that, we have a caller joining us from Kurnool now. Hi, Mansingh. Good evening.
Very good evening.
Yes, how can I help you on the
I'm glad
show?
and very thankful for taking my query.
It's our pleasure. Please go
My
ahead.
query is regarding GMR Airports, madam.
Yeah.
I'm holding 200 shares at
Okay.
the price of 72 rupees.
Okay.
Today it posted Q4 results. I can hold the stock 1 to 2 years. It is facing resistance at 91 level. Should I
Yes.
book profit here and enter lower level? I want to know the
Okay.
technical and fundamental analysis. What are the future prospects? And,
You're looking for
near-term
a
target.
technical view on it?
Yes, madam. Yeah, technical and fundamental, madam. Near-term target.
Both. Okay, okay.
Yes, madam. Both, madam.
Understood. So firstly, I'd like to come to you, Rajesh, on the fundamentals of GMR Airports. How are they looking like? Are you optimistic on the counter?
so today GMR Airport have given the result, and we can see the first time on a quarterly basis the company given positive profit after tax number. In last 12 to 18 quarters, we can see that they are into loss. EBITDA at EBITDA level, the company is in profit, but due to the higher depreciation and higher interest, the company is not able to give the positive bottom line. This is the first quarter where the company has given the positive bottom line. And looking at the business model of the company, they are into airport maintenance and airport development. So the prospect of the company is very good, and we can expect a good and from last 2 to 3 months the stock price has also risen by almost 30 to 40, 25 to 30%. So my advice for the investor to keep invested in the company.
Okay, so stay invested in GMR Airports is what Rajesh is suggesting for long term. And with that, Sundar, I'd also come to you and take your technical view on the counter. What's your sense on GMR Airports? How is it faring on the charts?
Yeah, Himanshi, the stock is positive on chart. Now I'll tell you the reason why. So on 24th April, the stock has given a strong breakout of the previous resistance which was formed at 9 December. The price was at around 87. Now from past 2 to 3 days, the stock has corrected, and this is the kind of retest kind of a scenario for a stock. And from past 2 days, the stock has given a return of around 2 to 3%. And I could say that this is a classical example that a breakout followed by a retest. So I am positive on the stock. And apart from this, if the stock crosses above 91 levels, then I would not be surprised to see the stock dashing till 100 levels.
Okay, understood. Thank you for that. And now we have Kanan joining in on the phone line from Chennai. Hi, Kanan. Good evening.
Good evening, ma'am.
Please go ahead with your question.
I'm holding 300 shares of Cosmo First, madam, at an average of 615 rupees. I'm accumulating for the last 4.5 years.
Okay.
Today, the share has increased by 20%.
Correct.
I just want to know, is there really a turnaround story? Because one more news is in the recent past, the promoter has sold a huge chunk of shares. Both are contradictory. I just want fundamental advice as well as the technical advice, whether I should take my profit or I should hold, because I am a long-term investor, I can hold for 2-3 years.
Sure, Kanan.
Thank you, madam.
Most welcome. Rajesh, starting with you, Kanan from Chennai currently holds 300 shares of Cosmo First at 615 rupees a piece. He's made a profit of above 53,000 for himself. And he's asking, given how the stock price per se has been moving and also a big chunk of promoters decreasing their stake in the company, do you think it has any kind of negative effect? Especially, also let's not forget that the company came with a strong Q4 with consolidated profit rising above 76%, and also the fact that small cap companies like Cosmo First itself have shown some kind of resilience in a volatile environment such as the present. What is your view on Cosmo First, and do you think Kanan should book his profits already?
So Cosmo First is basically into film business, and the prospect of film business is very positive from looking from here. And if you talk about the promoter stake selling, sometime it happened that when the stock price increases, the promoter keep trimming their their stake in the company. But there are two things. If we talk about how promoter, why the promoter is trimming their stake, one is that they want to invest in some other business, which is not the case of this company. So it could be possible that the promoter is selling the stake to remove from the business also. But the quarterly numbers have been very positive for this Cosmo First. So my advice is investor can remain invested, and if it go above a little bit around 900 level, then he can book profit.
Thanks for that view. With that, let's go across to a caller joining us from Hyderabad. Hi, Bhaskar. Good evening.
Yeah, good evening.
Yeah, how can I help you today?
Yeah, I'm holding PG Electroplast, 200 shares at price 800.
Okay.
For short term, I want to know the technical view.
Okay, for how long are you planning to hold?
3 months.
3 months. Okay. So, Sundar, I direct this question to you. Bhaskar is planning to hold PG Electroplast for 3 months. And, if I look at the charts, the stock is witnessing a downward trend. So, what are the key resistance and support levels to track in the near term, Sundar?
Firstly, Himanshi, I would like to narrate this stock. Okay, so the stock has been in a continuous uptrend, and from 7th January itself, the stock has given a sharp correction. And apart from this, from Feb to mid-Feb, the stock was trying to gain some positive momentum, but again, the stock failed. Now, talking about what is happening at current scenario for the stock is holding its 200-day moving average, and I could see that there could be some hold, some days of hold to these levels. Talking about the resistance which need to be watched out for the stock. So firstly, the important resistance is at 920, and if the stock closes above this 920, then I would not be surprised that the stock will be making a new 52-week high.
Okay, and now we have another caller joining us from Calcutta. Avi is on the phone line. Hi, Avi.
Hi, good evening.
Please go ahead.
Good evening, everybody.
Good evening.
My query is about Northern Arc Capital Limited. So
Okay.
I've got 1,000 shares bought at 173. So I want to get an idea of the fundamental view and technical view, as well as if the panelists could comment on the recent declared results of that company as well.
Sure, sure.
And I'm willing to hold for like 1 to 2 years.
Okay, okay, noted. Rajesh, let's begin with you. Our viewer from Kolkata currently holds 1,000 shares of Northern Arc Capital at 173 rupees a piece. The stock has climbed to about 219 rupees. In fact, it was up about 6.5% in trade today itself. Could you comment a bit on its quarterly results and what do you think about the future outlook?
So the company is into non-deposit NBFC, and they have a good presence in Eastern India, where 316 branches they have, and this quarter it is given a flat result, I could say, because only 8-9% revenue increase, and profit is down. So such type of company is not performing when the credit cycle is on a downward trend. So last quarter we have seen the credit cycle was on a downward trend, but from the last month the credit cycle has little improved. So but I am not very convinced with the company business model, as well as how the company is performed in the recent past.
Understood, understood. Thanks for that view, Rajesh. With that, we have a caller joining us from Hyderabad. Hi, Kiran. Good evening.
Hi, everyone. Yeah, good evening.
Yes, how can I help you today?
So I'm planning to buy the Afcons Infra shares, but before that, I would like to know the fundamentals of it.
Okay, okay. So, are you a long-term investor, Kiran?
Yes, I'm planning to invest it around for 2 to 3 years.
2 to 3 years. All right. So Rajesh, I'd come to you again on this one. Currently, it's trading at 448, and you know, Afcon Infra is an infrastructure engineering and construction company, as we all know. So, what is your outlook on the company? Are you positive, and what should Kiran be doing? Should he be buying shares of this particular counter?
Yes, Kiran, you can buy Afcon Infra because this is the company which is 10th largest international marine and port facilities, 12th largest in contract and bridge segment globally. So the business model is good. The company is trading at a competitive PE of 36 also. So if we compare with other port companies, the company business model is much better because they are into development of port as well as marine facilities. And this quarter they have given a good amount of profit also, good result also. So you can start investing in this company, but I will suggest you can wait for a little deep to invest in the company.
Right. Thank you so much for that, Rajesh. And now we're being joined by Mukeef from Hyderabad. Hi, Mukeef. Good evening.
Good evening.
Please go ahead.
Yeah, my question is about Swiggy.
Okay.
I have 200 shares at the price of 420.
Okay.
I'm looking for medium term, 2 to 3 years. Should I hold or should I sell?
Okay, sure. Sundar, I will swing this question to you. Our viewer Mukeef from Hyderabad currently holds 200 shares of Swiggy at 420 rupees a piece. He is sitting on a loss of about 20,000 rupees. Now, Swiggy is an interesting company because being a platform company, it does provide a competitive edge to the platform ecosystem, but a lot of brokerages have come out and said that they're concerned about its quick commerce business. Now, this has definitely also pressured the stock price. How does the technicals of Swiggy look like, and do you think there's some strength left in it or not?
So Malika, straight away I'd say no. I mean, if you see the stock is, trading in a very consolidation range. And apart from this, there is no positive sign or positive reversal from this counter. And Malika, I would like to say to the viewer that he should place a stop loss below 300 on daily close basis, because if the stock price close below 300, then we could further see more sharp dip coming from this counter as well. So this is not a good counter to watch for me.
Understood. Thanks for that view. With that, let's go across to a caller joining us from Guntur. Hi, Siddharth. Good evening.
Hi, madam. Good evening.
Yeah, how can I help you today?
I'm holding 550 shares of Morepen Labs, madam.
Okay.
Should I add more at this current price?
Okay.
I want technical.
Are you a long-term investor, Siddharth?
Yes, madam. 3 years.
3 years.
More than 3 years.
Understood.
Yes,
so currently it's trading at 67 and you bought it at 66, hovering around the similar levels.
Yes, madam. I want to add
Rajesh,
more. Where can I add?
yeah, okay. So since he wants to add more, I'd like to come to you, Sundar, firstly. What should be the correct levels to accumulate more?
Yeah, Himanshu, so he could, add at current market price itself, because I could see on today's session that the stock has given a resistance breakout which was formed at around 67 level. The stock looked positive to me, and it is creating a classical flagpole pattern in daily time frame. So yes, he could add at current market price, and the expected target for me in a kind of long-term horizon where I'm looking out for a weekly time frame, the stock should rise till 90 levels.
So the stock can climb up to 90 levels is what Sundar is suggesting. And Rajesh, what's your sense on Morepen Lab?
Yeah, Morepen Lab is very good company. It is a leader in pharmaceutical and medical device industry, and it has a 6 API also. Currently trading at 31.5 PE. So the company is on a cheaper side if you compare to small cap other medical pharma company, and this has given a good numbers also. Consistently every quarter the number is on an increasing side. So I can advise investor to buy at current level, and my 1 year target is around 105. for the Morepen Labs.
100 to 105 for Morepen, quite attractive. And now we have Rohit on the phone line from Bengaluru. Hi Rohit, good evening. Go ahead with your question, please.
Yeah, good evening.
Good evening.
Yeah, my query is regarding CG Consumer, that is Crompton Greaves Consumer. I have 400 shares at 346 that I purchased yesterday only.
Okay.
And I'm planning to add more. So my holding time is a minimum of 1 year. So I'd like to have a technical and fundamental view about this.
Sure. And why did you purchase these shares yesterday? Any particular reason?
No, CG Consumer I was observing since some 1 or 2 months, and the results were particularly good. That's why.
Okay. Rajesh, let's talk about Crompton Greaves. So before that, our viewer currently holds 400 shares at 346 rupees a piece, which he bought them just yesterday. And his argument was that the results were good, and plus he's had an eye on Crompton Greaves for the past 2-3 months. How does the fundamental story of Crompton Greaves look like? Because it hails from the electrical equipment space.
Yes, his decision is very correct to buy Crompton Greaves consumer, because Crompton Greaves has a good market share in all the electrical equipments, and they have created a niche market for them in pump also. So the company is on a growth phase also. Numbers is also improving quarter by quarter. This quarter also they have given, if we compare YOY growth, then it is a decent growth. Profit is also increased almost 15 to 20%. So his decision is correct, and we can expect a good almost 30-35% growth from here in the Crompton Greaves consumer.
Okay, thanks for that view. Thanks for that view, Rajesh. With that, we are joined by a caller from Hyderabad. Hi, Rakesh. Good evening.
Hello, everyone. Thank you for letting on me to the show.
It's our pleasure. Please go ahead with your query.
Thank you. I wanted to know if it is the right time to enter into the stock NMDC Steel Limited, because its book value is currently low under the share price.
Yeah.
So I just wanted to know if it is the right time to enter the stock.
Okay. And are you a long-term investor, Rakesh?
Yeah. I'm not a trader. I just invest and I just leave it for like 2-3 years.
Okay. So Rakesh wants to enter NMDC Steel, and currently it's trading at 38.9. So what suggestion do you have for Rakesh? Is NMDC Steel, when we talk about the valuation, is it rightly valued? What suggestion do you have?
So earlier also said that the metal prices have corrected and it is bottom out. So because of that, the company has given little the stock price increase in last few trading session, but the company is at EBITDA level also the company is a loss making, bottom line also company is loss making. So I advise if he can select some other company where the numbers are much better in comparison to NMDC Steel. So he could have been in a better position.
Okay, understood. And now we will take up another WhatsApp query. Kareem has written to us from Dubai saying that he currently holds 500 shares of Finolex Cables. Finolex Cables, is it? Can we just confirm if this is Finolex Cables or Finolex Industries? Because he's bought them at 1,595 rupees a piece. And these are 500 shares. Okay, Finolex Cables, because the highest value of Finolex Cables in 52 weeks was 1,700. Sundar, what is your view? Because Finolex Cables has dropped down to 959 and very close to its 52-week low, in fact. How does the future prospect of the company look like, especially observing how the stock has been moving?
Yeah, so Malika, if I refer the daily time frame, the stock is into a sideways trajectory, but it is seen that from past few days, the stock is trying to break its resistance at 980. So if the stock price crosses above 980 and it closes above it, then I would be positive on the stock, and the stock could reach till 1200 level. Apart from this, if you see, the major trend reversal will happen only if the stock price crosses above 980 level. Other than this, the stock is not a good counter to watch out.
Okay, thank you so much for that view. With that, we have a WhatsApp query. So, Guru holds 500 shares of RVNL at 320 a piece. He hasn't mentioned the time horizon, whether he is looking for a long-term view or a short-term view. So, firstly, I'd like to come to you, Rajesh. Talking about the fundamentals of RVNL, it's a very strong company fundamentally, but currently it's trading at 405. What is your opinion on RVNL? Should the investors stay invested in this counter for long term?
RVNL is leading railway company and engaged in business of implementing various type of project for railway. And earlier also I told that the government is in process of giving lots of order for railway companies from railway ministry. And because of that, in last week we have seen a good rally in the stock also. The company is in a better position to capture all those orders, and the execution is also expected to be very good. Numbers for quarterly as well as annual number is very good. The company is trading at 65 PE. Because of that, the last year we have seen lot of order from Railway Ministry to RVNL for implementation of various project. So because of that, those company are always trading at a higher PE, but the company have a lot of potential for moving ahead from here. And 1 year target, if we talk about, then fundamentally I have 550 target for RVNL.
Okay, thank you so much for that view, Rajesh. And it was a pleasure having you for the first time on Ask Profit in the evening edition. And thank you so much, Sundar, for being there with us. With that, yeah, it's a wrap on this edition of Ask Profit, viewers. But viewers, on the other side, there's this action-packed bulletin of Profit 360. My colleague Sanjana, takes over with Profit 360, bringing you sharp insights on markets, national and international news. Sanjana, over to you.
Thanks so much for that, Himakshi. Thanks so much, Malika. And I can clearly see by the amount, the quantity of callers that you've got today, that this show has been quite a roaring success, and I hope that listeners and those that were invested were able to get most of their queries answered. I'm going to see you on the other side of this very short break, where we're going to be looking at the Sensex rejig. We're going to look at the MEA's very stern message to Turkey, and of course what's happening with regards to Selby and the latest in High Court. But right after this very short break. Thanks for watching.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Nifty and Sensex closed lower for the day. All sectoral indices and lower barring Nifty Media. Nifty Media gains 1% for the day, ending higher for the second consecutive day. Adani Group posts a stellar performance in the financial year 24-25 with its EBITDA hitting an all-time high of 90,000 crore. The BSE revises the 30-stock Sensex, removing IndusInd Bank Limited, which faces suspected fraud and corporate governance concerns. Trent Limited, Tata Group's apparel retail arm, and Bharat Electronics, a market favourite in the defence sector, have been added to the index. Sources tell NDTV Profit that IndusInd Bank's board is shortlisting potential CEO names and is prioritising a clean image with proven governance record, adding that a public sector banker name may be tapped.
मोदी की नसों में लहू नहीं, गरम सिंदूर बह रहा है.
Prime Minister Narendra Modi reaffirms that Pakistan will not get water from India's rivers, reiterating the continued suspension of the Indus Water Treaty. India delivers a stern message to Turkey during the MEA briefing, with spokesperson Randhir Jaiswal urging Ankara to press Pakistan to end its support for cross-border terrorism. The Mumbai subsidiary of Turkish ground handling firm Celebi Aviation approaches the Bombay High Court, challenging the revocation of its security clearance, seeking suspension and annulment of the decision. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Over the next 30 minutes, we're going to bring you the latest market updates along with key national and global headlines that matter. So let's dive right into it. Benchmark indices closed lower today with Nifty and Sensex finishing in the red. Mahindra and Mahindra and ONGC were among the biggest losers in the Nifty. Now, Nifty FMCG emerged as the worst performing sector, weighed down by Colgate and United Breweries. Most sectoral indices ended lower except Nifty Media, which gained 1%, marking its second consecutive day in the green. For more action from the markets, let me go over to my colleague Harsh.
Well, the Nifty was under a bit of pressure and the breadth was tough pretty much through the day. We did see a bit of improvement in the breadth towards the fag end, but outside of that, IndusInd Bank stood out in terms of the numbers and the way in which the stock reacted. Another one which did okay in trade was a JSW Steel. Again, numbers anticipated tomorrow, so keep your eye out on that one. You also have an ITC, numbers expected today, reaction tomorrow. some counters on the Nifty. But the breadth was difficult, as I did mention. 1% and more lower were 20 plus stocks in trade today. So within the Nifty 50 basket, 40% of the stocks declined 1% or more in trade. So that's the one thing. The positive, of course, is that the Nifty recovered a bit from the day's low. So we closed around 0.8% higher. The Nifty Bank led that recovery, 400 points from the low point of the day for the Nifty Bank, and that too in the last half hour. So very strong move. Need to wait and watch what the reaction tomorrow will be. The Nifty mid cap and small cap indices also did or had a similar kind of trajectory. They saw a bit of a recovery. So solid day for some of these indices in the way in which they recovered from the day's low. Let's talk about some sectors in focus. A Nifty Auto was down around 1% or so, so pressure across the board. 1% lower on the Nifty Auto, FMCG down 1.4, IT down 1.3, Pharma was down nearly 1%. But mind you, Pharma in terms of numbers has come out with a good set of numbers. Some stocks really doing well within the Pharma basket, and MQ Pharma, for example, phenomenal set of numbers, and therefore you'll see some zing within Pharma, and we have seen that over the last few days as well. Realty, though, within the broader markets was down around 0.5% thereabouts. The PSU banking index underperformed the Nifty Bank, 0.6% lower on the PSU banking index. The breadth, as I did mention, was difficult, but it improved right towards the fag end. Of course, it's going to be a very interesting close to this week because of the way in which this week has played out. It's been very range bound, but at the same time, we have seen dips come through. Again, the interesting piece also is going to be on the way in which FIs and DIs are going to, the numbers for those are going to stack up. So plenty to look out for.
Absolutely plenty to look out for as we look at the markets tomorrow and on Monday. And with growth projections for FY25 at just 5%, investor sentiment remains cautious. However, Dheeraj Agarwal of Ambit Investment Managers sees potential for a market rebound. He pointed to the resolution of geopolitical conflicts, progress on trade agreements and expected rate cuts in both India and the US as key drivers that could fuel optimism.
We keep on lowering our expectations and hoping that the results will be better than expected. But it doesn't change the fact that the numbers are just 5%. It doesn't change the fact that FY25 earnings growth is 5 or 6% or 6.5%, and markets are trading at 21 times P multiples. Does not justify. So in the near term, markets can rally a bit more on narrative. I mean, that's obviously possible because there are a few positive narratives to play, right? The potential conflict with our neighbor is over. There could be potential trade deal with the US. There'll be potential rate cuts in India and perhaps in the US as well. So there are, I mean, there are these macro sound bites, but eventually, if you take a 12-month call, earnings will have to play through. Otherwise, we have a problem.
Now, the Adani Group has strengthened its credit rating and reduced financial risks by cutting debt. Nearly 90% of its earnings now come from assets rated AA and above. With a lower cost of borrowing at 7.9%, Adani has made its balance sheet more stable. Anushi now explaining in deeper insight.
Now, across the group companies, if we see what has happened, in terms of where Adani Enterprises is, Adani Green Energy is, we are looking at a subsequent change in the ratings for all of these companies from what it was in April 2019 to what it is in April 2025. Just for context, if we see Adani Power also, what was the rating in BB Plus has now changed to AA, so AA. So that's the overall picture that we are seeing in terms of where the credit ratings are concerned for some of these businesses. Of course, rating change across the board that we are looking at for the group companies. But apart from that, it's the cash book and the balance sheet which is in focus. Now, if we are looking at the cash book which is there, they had a cash balance of about 9,586 crores. This in context to the overall gross debt we are looking at is at 56,931 crores. So if we take the ratio also between that, so that translates to about 16.84%, which is much higher than the minimum requirement of 5% that is there. So that is something which is interesting, that for the Adani Group companies that we are looking out for. In fact, company has a comfortably de-risked its balance sheet over the course of these last few fiscals that we are looking at. But apart from that also, in terms of, let's see how the breakup is in percentage of total debt. So PSU banks about 18%. USD bonds 23% is what we are seeing. Along with that, NBFC and FIIs have about 25%, while others like DIIs and private banks have a comparatively lower mix in terms of where the long-term debt emits from, and global international banks about 26% is the kind of ratio that we are looking at. But it's the EBITDA overall which has been impressive for the street, especially this is with an overall EBITDA standing at 90,000 crore that we are looking at. Of course, key contributors being something like Adani Power with almost a 24,000 crore of EBITDA that we are looking at. Adani Enterprises there as well, but even Adani Ports is in focus here, seeing these kind of higher numbers that we are looking at. Yeah, that's at the level of 20,471 crore that we are seeing. What's kind of fueling this growth if we are looking at? So transport and cement, both of these have recorded growth. Cement in fact up over 69%, almost 70% is what we are seeing.
Now, the BSE Sensex rebalancing will take effect on June 23rd, bringing notable changes to the 30 stock benchmark index. Nestle India and IndusInd Bank will be excluded, making way for Trent Limited and Bharat Electronics Limited. Now, this reshuffle reflects shifting market dynamics, with Trent's strong retail presence and Bell's defense sector momentum driving their inclusion. Meanwhile, IndusInd Bank's governance concerns and Nestle's declining market weight contributed to their removal. For a deeper breakdown, my colleague Agni now joins us with a breakup of everything. Agni, over to you.
There has been a rejig announced in BSE indices. So first of all, big news, the IndusInd Bank and Nestle are out of the Sensex, and Trent and Bharat Electronics are in. Now Sensex is the top 30 companies on the BSE by market cap. Next in line is the BSE 100, which is an index of the top 100 companies in India. Now the companies that are out of the index are Bharat Forge, Dabur and Siemens, and the companies that have replaced these are Dixon Tech, Coforge and Indus Towers. Now Sensex 50, which is the top 50 companies of the country on BSE, have also seen a rejig. Now Britannia and Hero MotoCorp are now out of the index. In their place you will find Interglobe Aviation and Shriram Finance. Now Sensex Next 50, which is the other 50 companies after Sensex 50, they also have seen quite a few changes, but some of the names are repetitive. So Interglobe Aviation is out, Shriram Finance is out, Bharat Forge is out, Dabur India and Siemens again. These are the companies that are gone, and in their place you will be seeing Britannia Industries, Dixon Tech, Coforge, Hero Moto and Indus Towers. Now in BSE BankX also there has been a change. Now BankX is a list of top 10 companies in the banking sector. Now the company that has gone out of the BankX is Canara Bank, and in its place is IDFC First Bank that is coming in. Now these changes will be reflected on the indices on the opening of June 23rd, that is a Monday, and inflows are again subject to change going forward.
Thanks so much for that, Agni. Meanwhile, let's take a look at what's happening with IndusInd Bank. After they posted a 2,329 crore net loss for Q4, marking its first quarterly loss in 2 decades, the downturn now stems from accounting discrepancies, stress in microfinance portfolio and derivative losses. The bank uncovered 674 crore mistakenly booked as interest income over 3 quarters, which was fully reversed. Additionally, 172.58 crore was incorrectly recorded as fee income in its microfinance business. Asset quality has also deteriorated, with gross NPAs rising to 3.13 from 1.92 just a year ago. For a deeper analysis and to understand whether the worst is actually over, let me quickly go over to my colleague Harsh.
Well, I want to talk about what the IndusInd Bank management has said on the con call yesterday. One, what they've said, clear, timely disclosures are being made. Second, all pain is upfronted, factored and accounted for. 3, FY26 is a fresh start for them. The liquidity coverage ratio as well as the capital adequacy ratio remains fairly healthy, and the CEO selection is on course. Names will be sent to the RBI before the 30th of June. This is what the management has said in terms of what could possibly be construed positively. Now, should investors, despite all of this, be worried, and what should they be worried about? One, is the kitchen sinking fully over? Has all the rot within the bank in terms of its books and the way in which processes have been aligned, has all of that been cleaned up? Well, not so sure. Second, erstwhile CEO has guided no loss in Q4. So that's what the former CEO said, but we've seen a very, very large loss in against that. Third point of contention or concern, new adjustments disclosed in the Q4 numbers. Now, management is saying that this is all that there is, but could there be more is really the question. Regulatory action against all that has played out is yet to be factored. Mind you, there is a fraud involved as well, and therefore what would that lead to in terms of the bank's performance? 5, action in terms of what the bank is taking against the former CEO as well as deputy CEO. No executive directors anymore on the board of the bank. All the directors are now non-executive on the board of the bank post the resignation of the CEO. And could a PSU banker be nominated as CEO? If that were to happen, that's also a material negative. So some positives, some negatives. I've just highlighted all of them. Now, in terms of what brokerages, at least the ones which are positive, are making of this and reasons why they are positive. Jefferies maintains a buy. They've cut their target price from 1,040 to 920. They believe the cleanup was larger than anticipated. The new CEO is to lay out the path forward, so they'll wait and watch for that. They believe valuations remain reasonable. Macquarie on an IndusInd. They maintain an outperform, target price being 1,210. They say that the large miss and multiple events have now been recognized. Asset quality is still a concern for them. Stock trades at 5 times the annualized Q4 operating profit, which is well below peers. And the key monitorables, management succession, when do credit costs peak, sustainable margins, and governance. Those are the factors they'll look out for.
Meanwhile, sources tell NDTV Profit that IndusInd Bank's board is finalizing a shortlist of CEO candidates, prioritizing leaders with a clean track record and strong governance credentials. Now, this comes as the bank grapples with accounting discrepancies, fraud allegations, and regulatory scrutiny, making leadership integrity a top concern.
So what is happening at this point in time is that the board at IndusInd Bank is currently still working on a short list of potential candidates. These candidates, according to what sources are telling us, are being prioritized with respect to their clean image, with their proven track record. The one criteria that the board is seeking is that the candidates should not have greed in their psyche. Now, of course, this process is still ongoing, and a short list will be prepared in the next few weeks, after which it will be sent to the Reserve Bank of India as potential CEO candidates who will take over at IndusInd Bank. Remember that just last evening we've seen IndusInd Bank announce a large loss, but also that there are suspected fraudulent events that have happened over the course of the last few months at the bank, which the board says is currently under investigation. The board will reach out to appropriate authorities for these investigations. It is important to note that the board might look at a public sector candidate to take over at IndusInd Bank, while private sector candidates are still an option, but the preference seems to be for the public sector side of the story. These developments are still fast, and it's only going to be over the next few weeks that a final list will emerge.
Meanwhile, SEBI chairperson Tuhin Kanta Pandey has confirmed that the regulator is examining potential major violations in the IndusInd Bank fraud case. Speaking at the Asokham's 16th Capital Markets Conference, Pandey stated that while the Reserve Bank of India is handling accounting discrepancies, SEBI is investigating the securities market violations linked to the bank's leadership.
Board yesterday said that the Inter submitted its report to the government. So any step that SEBI is taking on that and regulatory agencies?
No, I think the RBI is looking into that. Whatever the SEBI has to do in relation to whatever SEBI's remit is, SEBI is doing.
Now, ITC reported its Q4 FY25 earnings showing muted profit growth due to weak demand and rising input costs. Standalone profit from continued operations, however, rose 0.8% year-on-year to 4,874 crores, falling short of analyst expectations of 4,942 crores. However, an exceptional gain of 15,179 crores from the sale of its hotel business pushed the net profit to 19,561 crore, marking a 290% year-on-year surge. Meanwhile, standalone revenue grew nearly 10% to about 17,248 crore as compared to 15,734 crores a year ago. Process Envy is doubling down on its commitment to India's startup ecosystem, with CEO Fabrizio Bloisi outlining ambitious plans to expand investments and take 5 portfolio companies public this year. Now, the Dutch investment giant has already pumped 9 billion into Indian ventures, backing firms like Meesho, Swiggy, PayU, Urban Company and Rapido. Let's take a listen into this interview by my colleague Haripriya.
Beyond Swiggy and Rapido, I'd like to highlight Meesho. Meesho is doing amazing well, growing very fast. It's disrupting in the way they operate, serving much more customers that were not served by e-commerce before. This is amazing. Besides Meesho, we have PayU. It's a leader in payments, and we think payments and credit has a big growth ahead because in India, e-commerce and technology is going to keep growing. So these are a few of our companies. We have many more, for example, Mintify or Vastu in fintech. So we are just getting started. We have more 30 companies, and I'm sure
buy more IPOs.
We will have many more success cases here. Or I told you 6 months ago, I think we have the same expectation that the next, let's say 12, 18 months from now, around 5, can be a little more, a little less, companies of our portfolio might go public. But remember, we have a 35 portfolio company. We will do many more investments. So I think our objective is not to IPO the companies to create a very good ecosystem and winning companies, but we will IPO during the journeys of those companies, and we are very confident of what we are building here together with our partners.
In a significant push for infrastructure and connectivity, Prime Minister Narendra Modi visited Rajasthan's Bikaner district, where he inaugurated the redeveloped Deshnok railway station and flagged off the Bikaner-Mumbai Express. The station, redesigned with architecture inspired by the Karni Mata temple, aims to serve thousands of pilgrims visiting the revered shrine. Now, beyond the railway developments, the Prime Minister also laid the foundation stone for multiple projects worth 26,000 crore, spanning urban development, transport and tourism. Later, addressing a rally in Bikaner, Modi launched a sharp attack on Pakistan, condemning decades of terrorism.
मोदी का दिमाग ठंडा है, ठंडा रहता है, लेकिन मोदी का लहू गर्म होता है। और अब तो मोदी की नसों में लहू नहीं, गरम सिंदूर बह रहा है। अब भारत ने 2 टूक साफ कर दिया है। हर आतंकी हमले की पाकिस्तान को भारी कीमत चुकानी पड़ेगी।
Meanwhile, the Ministry of External Affairs has confirmed that the third of 7 multi-party delegations departed for Russia this morning as part of India's diplomatic push to isolate Pakistan internationally over its alleged support for terrorism. Now, the delegation will also visit Slovenia, Greece, Latvia and Spain, engaging with leaders and policymakers to rally global backing for India's stance on cross-border terrorism. MEA spokesperson Randhir Jaiswal also emphasized that India expects Turkey to urge Pakistan to cease its support for terrorism and take credible action against its long-standing terror infrastructure.
Departed this morning to Russia. From there, they will travel to other countries, including Slovenia, Greece, Latvia and Spain. 2 groups, one to Japan, left yesterday. and that group will be traveling from Japan to South Korea, Indonesia, Malaysia, and Singapore. And the third group, the second group which left yesterday, was to the United Arab Emirates. They will also further be traveling to DRC, that is Democratic Republic of Congo, to Liberia, and to Sierra Leone. 4 groups are to travel shortly. 3 groups will be leaving on 24th, and this is to the United States, 1 country, several other countries along with it. Then there are a group which will go to South Africa, to Ethiopia, Algeria, and Egypt, these 4 countries. And then the 7th group will travel on 25th. They'll go to Europe, to France, UK, Germany, Brussels, and Denmark, and 2 countries. On the Turkey matter, Chalet, this matter has been discussed between with the Turkish embassy here, the Turkish embassy and our Ministry of External Affairs. But I understand that this particular decision was taken by the Bureau of Immigration, because they look, Civil Aviation Security, because they are mandated with security issues. On the question of Turkey, well, we expect Turkey to strongly urge Pakistan to end its support to cross-border terrorism and take credible and verifiable action against the terror ecosystem that it has harbored for decades now. And relations, as you know, are built on the basis of sensitivities to each other's concerns.
And External Affairs Minister S. Jaishankar has reiterated that the recent cessation of hostilities between India and Pakistan was negotiated directly between the 2 nations without any international mediation. He was speaking to a Dutch broadcaster, NOS, and Dr. Jaishankar dismissed claims that the United States played a role, emphasizing that the agreement was strictly bilateral.
Well before the April 22nd attack, we had already drawn this to the attention of the United Nations. Now, we identified the people, the attackers. We know that they are linked to the Lashkar. We know the command centers of the terrorist groups, okay? It's not a secret. In fact, I should show you. We have, if you look at the UN Security Council, UN Security Council publishes regularly a kind of list of major terrorists, okay? So it looks like something like this. This is the UN. It says the list established and maintained pursuant to UN Security Council Resolution 1267, whatever. Now, if you go through this list, these very places, the terrorist list, these are famous, well-known terrorists, notorious terrorists. They have a place of residence. It says they operate out of here.
And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide.
Tata Motors has launched its upgraded Altras in Mumbai today, but this comes at a time when its own SUVs like the Punch and Nexon have been the best sellers, and the market itself is becoming more SUV driven. Against that backdrop, the possibility to upgrade the premium hatchback is quite an outlier move, I would say that. To talk to us more about it is Mr. Shailesh Chandra. He's the MD of Tata Motors PV and EV business. Mr. Shailesh Chandra, welcome to NDTV Profit, sir.
Thank you.
Just to extend the conversation, extend that introduction that I did to this piece, you have best-selling SUVs, there's SUVification of the market. What is the idea behind upgrading the Altras at this point of time?
You know, one that you're absolutely right. If you really see the trend of how the segmental shifts have been happening, the SUV has grown from about 30% to 55% share of the overall TIV in the last 5 years, whereas hatches has declined from 46% to 24% or so. But two things to remember here. One, that the decline of hatches was more sharper in the initial 2 years of COVID. And for the last 2 years, the drop has been about 3 to 4%, which gives you a sense of stabilization of where eventually the shares of different body styles would kind of stabilize. So that's one point. And it's still a 1 million size. You know, hatch market is significant size, and it gives an offering to a lot of first-time buyers, right? So that's one. Second, you should see what's happening within the hatch segment. Within the hatch segment, we slice it into 4 sub-segments: the entry, the mid, the high, and the premium. This is the premium segment. Now, over the last 5 years, we have seen that while the entry hatch has seen a significant decline in the share within the hatch segment, premium has increased from 24% to nearly 31-32%. So it's nearly 1/3 of the hatch, which itself is a 1 million market. And as India grows, and if now the shares of hatches are going to stabilize, then you're going to see a constant 1 to 1.5 million somewhere in between this number. Hatch is going to be stable, so it's a big size. Within hatches, premium hatches are going to rule the roost, if I may use that word. And that's the reason why we are very optimistic about this segment. That's the reason why we decided to refresh Altroz with it's in the new avatar that you are seeing here today.
So you mentioned about the premium hatchback segment. A couple of questions emerged from that. How fast is this premium hatchback segment growing? And secondly, what is your share in this particular space, and where would you want it to be with the new product that you have launched today?
So one that I have already shared some of the statistics that while from a peak of say 1.4 million, the hatches would have gone down to 1 million or so. But hatches, premium hatch share has been increasing. You'll have to do a bit of arithmetic, but in the last 3 years, I see that premium hatches have sold more than 1 million, right? So it's a very strong segment to focus on, right? So that's one. As far as we are concerned, since the time of launch of Altroz in 2020, the share would have been, market share within that segment would have been about 20-21%. Last year, as the product aged, it declined significantly to maybe 10-11% or so. Aspiration is to bring it back to 20-25%, because this is the most premium car in segment now, with all the changes that we have brought, and it is priced very competitively. And Altroz has always stood out in its segment, and with all the new striking features that we have brought, the premiumness quotient which has gone up, the tech features which are, a lot of them are first in class and best in class. At the same time, this remains the gold standard of safety. So if you combine all this, we are very confident that we should again start eyeing for 20-25% share in the premium hatch.
Does the multi-powertrain strategy also work to your advantage? Because, correct me if I'm wrong, I think Altroz is the only hatchback which now has a diesel powertrain still going on. So is it a conscious decision to continue with the diesel mill in the premium hatchback space?
Yeah, see, multi-powertrain as a strategy is across our portfolio. And Altroz is the only, as you rightly said, this is the only hatch with diesel. And we had a very cost-effective diesel option with us. And therefore we said, why not continue till there is demand? You still have, I would say 10-15% of your demand coming from diesel buyers. It used to be very high in times where the gap between the price of diesel and petrol used to be wide. So people who are buying diesel cars for the reason of saving money possibly would have shifted to CNG. But those who are buying for sheer thrill of its performance and drivability are still going for a diesel. So why not give that option if that is available? That is the philosophy that of the reason behind, because in premium segment you look for that kind of performance. So that's why we have continued with diesel for performance and thrill, where CNG gives you a good TCO option and petrol gives you a balanced choice. So I think therefore it pretty much takes care of requirement of a wider section of customers.
Okay. Yes, you have a very clear multi-powertrain strategy. We see the Punch is now offered in 4 powertrains, but there is, if I may say so, it is a crucial piece of that multi-powertrain strategy that is missing, that is the hybrid. I know this question has been posed to you multiple times, that when are you bringing it? Are you bringing in a hybrid? I thought it's time to revisit the question again, because in the last 1 month or so, with the Q4 earnings coming in, we have seen one of your primary rivals with whom we are contesting or competing for the number 2 position, Hyundai. They have said that they're going to bring in hybrid powertrains into India. Maruti also has said that they will bring in smaller hybrid powertrains. They are working on it. They have not given a timeline. Same thing with Hyundai. We have seen some recent developments. What is your take on it? Do you still stick to your stand that electric is the way to go and hybrid is only a stopgap solution, so to speak?
You know, our statement has been very clear that the larger imperative for the nation, which is around overcoming the issue of fossil fuel dependence on import, pollution, climate change issue, the eventual solution is a zero emission technology. And the faster a country is able to move towards that, that's the destination technology. For everyone, the destination technology has to be a zero emission. So our view on that does not change. And we are supportive of any initiative by the government to support movement in this direction, and that's why we have been very aggressive in terms of our expansion of electric portfolio. We are also coming with all the options that the market requires. So one is the imperative for the nation of in which direction the destination technology as far as powertrain is concerned should be moving. But there is a transition period for which you need to allow multiple powertrain options. I think with the width of powertrain options that we are giving to the customer, pretty much we are covering a wide range of customers. As far as Tata Motors' readiness to launch a hybrid is concerned, I think that is well protected. It's not that Tata Motors does not have the technology to launch, but it is also important for companies to keep certain focus. And we have shown our focus while giving wide range of options. If in future the market would require a hybrid, we would not close our options to anything. But I would say that the primary focus for us would remain on electric, because that is what we think is the destination technology.
So according to you, what does the future of four-wheel mobility look like? Electric, yes, I agree with you that yes, electric is the ultimate goal, but cannot be the only powertrain that goes in the future. So you see the mix to be like electric plus petrol plus CNG, or do you see it as electric and petrol, say 10 years down the line for you?
It will be all the powertrain options. I'm saying that it is, I would say the growth ones would be electric and CNG, because CNG you have seen in no time has gone from penetration level of sub 5% to 20% last year. And I believe that in the next 5 years, this should reach about 25% plus from a penetration perspective. Also, given the way the CGD network is growing, already you have about 7,500 plus gas stations, and government has ambition to take it to 15,000 in the next 5 years. So CNG is there to grow, and that's where we are being also very aggressive on CNG, because this is also an emission friendly option that you can give. So we are the fastest growing player in this segment. CNG last year we grew by 50% plus, the industry grew by 30%. So we believe that CNG is going to stay and grow, and it is a very good emission friendly option. Electric is going to grow. You are seeing all the players entering into the electric segment. So it's not everybody realizes that this is the future, so everybody is entering that segment. Petrol is going to stay. Petrol will start getting hybridized going in future for fuel efficiency reason, and also for those players who will be low on electric penetration, the CAFE requirement will also hit. So it will be a mix of all powertrains, and then on top of that the flex fuel is going to come. So this is a transition period. Before we arrive at the destination, there will be a lot of movement in this transition period. So you have to talk of, at different stages, what can be the potential mix. I gave you a flavor of in next 5 years what it can be.
Okay, the flavor of the next 5 years, and to club with it, we have seen that car sales have gone up. We are about 40 lakh units in the country at this point of time. 1 million of those is hatchbacks at this point of time. The car penetration itself has sort of remained stagnant at 32 to 34 per 1,000 people. We are seeing conscious move towards SUVs, which puts it out of the budget of, say, most Indian buyers. Do you think small cars need to make a return for this adoption to go up at this point of time?
One that, last 5 years if you see, the industry, new car industry has grown from 27 lakh to 43 lakh. It's a significant increase. We are becoming too pessimistic.
But our income levels have not grown at the same time.
Yeah, but household incomes are increasing. And that is very evident. Even if you see the next 5 years, and we made in the presentation also that the household income above 15 lakh is going to become 65 million households. So that is 2x jump, which will be the car buyers. So therefore, propensity to buy cars is increasing, and penetration is going to keep growing, right? China at, when they were at about this level of GDP per capita, their penetration would have been 52 against our 32 per thousand population. Today, they have grown to maybe 200 plus per thousand. So as we also, so we are very comparable to where China was around the same GDP per capita level. So it is bound to increase, and with the household incomes, doubling, the buyers, household who can buy cars, that doubling in terms of households augurs well for the auto industry. Now coming back to your question whether the hatches and the entry segment needs to grow for increasing penetration. What has been really happening, if you see, one, that the average price points of new cars have gone up. Median selling price has gone up maybe in 5 years from say 6-7 lakh to 11 lakhs now, and the market has grown, which means that the household incomes are increasing and have the propensity to buy expensive car. So it's a good news, and it validates what I'm saying, that household incomes are growing. The entry hatch segment has declined, right? It has declined, and my premise and hypothesis is, and this should be backed with data I'm saying, but informal data point that I have is that 5 years back, new car industry was 2.7 million, a used car industry was 2.5 million. Today, the new car industry is 4.3 and the used car industry is 5.5. Average selling price of a used car industry is 4.5 lakh or so, as against 11 lakh for new car. The entry hatches are around that price point. And so I believe that there's a lot of cannibalization, or pull in the used car market, where you are able to get a good car in good condition, I would say, a 4-year, 5-year-old car at pretty much the same price. Maybe it comes with warranty also to some extent these days, with vehicle financing options. So there is a bit of demand which is shifting to used car industry, cannibalizing the entry segment. That's how I read, because otherwise if you see 2020, if you do the arithmetics, used car plus new car transactions were about 5.2 million. Today it is nearly 9.8 million. So overall transactions has increased. So that is how I see, and therefore entry segment will be under challenge. The hatches volume might sustain, while its share would have come down significantly, but within the hatch segment the demand would shift towards more premium hatches.
Okay. And would you agree with this assessment that you are actually well positioned to make the most of the incoming demand that comes in? You have two products. If I see that the Punch as well as the Altroz are right there where this buyer is, would you agree with that assessment?
Our constitution, or how we conceive our portfolio, is developing a point of view on growth of different sub-segments in the next 5 years, and we ensure that we enter or exit certain segments basis that. And we have taken a view on Altroz because we feel that premium hatch segment is going to garner greater share of demand within the hatch segment, whatever the size might be. We have a Punch, but we are also seeing the mid hatch segment, where we have positioned a Tiago, also seeing greater share within the hatch segment. So actually the pressure is more on mid and high and entry, whereas mid and premium is seeing increasing share. So either a person is ready to buy a Tiago kind of a car, or then an Altroz kind of a car. They don't want to get stuck in the middle. So this is the phenomenon we are seeing, and therefore I think with the combination of Altroz, Tiago, and also Punch being the entry SUV for us, gives the right set of options to do well in the segment below 10 lakhs.
Okay. Coming back to the car of the moment, Altroz, your almost entire lineup is electrified. When can we expect electric Altroz?
Yes, I thought that this question is going to come because we have showcased Altroz EV in the past in some of the auto expos, and also at some stage I had said that this would possibly come with the next life cycle intervention of Altroz EV. But see, we have also been seeing the evolution of EV industry in the last 2 to 3 years. Eventually, earlier the idea was that in the 18 to 15 lakh segment, as the EV industry is growing, we should have 3 products. One, an entry SUV which is Punch, an entry hatch or a mid hatch like Tiago, and an Altroz for a premium segment. But what has happened that battery prices has been coming down, and therefore even Nexon 30 kilowatt hour has come below the 15 lakh price point. Now bringing a fourth product is too much of a crowding in where EV industry in that segment is at a certain volume and size. So that means that right now we don't want to bring Altroz EV, but in future if we see the space and requirement for this car, we'll always be ready.
All right. Another question on the Altroz powertrains finally. Don't enthusiasts, see, people love the car for the way it handles, the way the chassis behaves. Of course, it's the safest car in the space. Don't enthusiasts come and tell you, can't we put a 4-cylinder 120 bhp engine into this instead of the 3-cylinder? What are your take on getting actually a 4-cylinder engine for this particular car itself?
You know, we do a very rigorous engineering assessment, and what are the performance attribute requirement for a car of this category, and that is how we do all the selection of powertrains and all. We have to see also the balance between fuel efficiency, performance requirement, and with that combination we make choices. The choice which we have made is right. There were certain shortcomings which we have taken care of in the engine from an NVH perspective, from a low speed torque and power delivery perspective, and the car is very refined. So we have taken care of some of the shortcomings. But this debate around 3 to 4 cylinder for me is very intriguing. I might use a more polite word to that. But if you go to Europe, it's world of 3-cylinder engines. There are a lot of naysayers who have been talking about 4-cylinder, and they also use 3 cylinders. So, you know, it's efficient, I would say. But you have to take care of, you know, some of the NVH issues that might come because of that, which we have taken care of. That is how we have engineered the car.
Thank you so much, Sailesh, for speaking with us. Quite an insightful chat, and all the best for the Altroz going ahead.
My pleasure, and thank you.
Thank you. Thank you so much. Thank you, viewers, for tuning in. This is Tushar for NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome to NDTV Profit. You're watching IPO Adda, and the guest for today is coming from Scholars Bangalore. It's a company that owns and operates luxury hotels in India under the brand name The Leela. And joining me is Ankur Gupta, who is the managing partner, head Asia Pacific and Middle East for real estate at Brookfield. The company is backed by Brookfield, and that's why we have Ankur here to talk about the IPO. The IPO opens on May 26, closes on 28th, price between 413 to 435 rupees per share. It's an IPO of fresh issue of 2,500 crores and 1,000 crores of OFS. So the total size is around 3,500 crores, and that gives the company a market value of little over 14,500 crores at the upper end of the price band. Ankur, thank you very much for joining us on NDTV Profit. You know, Leela is a brand that everyone knows about it. It went through a bad patch, and then I think you have brought it back through the restructuring and by acquiring all the properties and the brand. Give us a sense of the journey in the last 3-4 years for the Leela.
Thank you very much for having me on your show. It's very exciting. Brookfield has invested more than $30 billion in the Indian ecosystem. All our businesses have done very well, but Leela is special. starting in 2019, when we acquired all the real estate, properties, hotels, as well as the brand and the management business at Leela, we've begun a process of three things: growing the business in a methodical manner, enhancing the operations and service efficiency, and finally making sure that the brand visibility achieves the global standards that it deserves. Leela is a special brand. Very few examples of luxury brands which are local, homegrown, that have found international recognition. Very proud that as a sponsor of Leela, as a promoter entity of Leela, Brookfield has been able to expand the Leela presence globally. Leela was ranked as #1 brand in hotel industry in the world for 2 consecutive years and regularly features in most global recognition and awards. So very proud of the journey. Just in context, when we acquired the business, it had 8 hotels. Today we have more than 20 hotels, including which are operational and well as hotels that are in the pipeline. So the business has made rapid progress. It's tripled in size, and I would like to believe that the best years are still ahead of us.
You're raising around 2,500 crores in fresh equity. What is it going to be used for?
So 2,500 crores will bring down the net debt levels at Leela to almost zero, which means the business will have ample liquidity and cash flow for growth, expansion, as well as enhancement of its business.
Currently, if I am not wrong, it's around 12 to 13 properties are under operations and others are in the pipeline. The top 5 properties for you account for nearly 93% of your revenues. How do you see growth coming in the entire portfolio? Because for the top 5 properties that you have, even there, the profitability is still, far off for some of those properties.
So I would like to make the distinction between properties that the business owns and properties that we manage on behalf of other owners. So the top 5 properties are the ones that the business owns, and there are 8 other properties that the business manages. So we only consolidate numbers for the properties that the business owns, which is why your question and observation regarding these 5 properties contributing a large portion of the company's profitability as well as revenue. Again, these are market-leading properties with an incredible revenue profile, dominant in terms of its luxury quotient and positioning on revenue compared to the luxury comp set that exists in its neighborhood. But most importantly, EBITDA margins, which are industry leading for any hotel operator in the world. We are above 48% EBITDA margins, which is industry leading, as I mentioned. At the same time, what contributes to that margin is a very high focus on service and customer satisfaction, which is underlined by our very high net promoter score numbers, which is the real voice of the customer at 85. So it's a combination of services, amazing real estate, as well as delivery consistently day in and day out.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Welcome, you're watching The Big Question. I'm Tamanna Inamdar. What started as a nearly 2,000 crore accounting discrepancy in IndusInd Bank's derivatives trading portfolio in March of this year has now snowballed into what the bank has itself termed as a case of a suspected fraud. The bank in its Q4 earnings call said that 172 crores of irregularity came to light in its microfinance business, with a fake fee income exposed across FY25. The suspected case of fraud has led India's fifth largest private lender to register its first quarterly loss in at least 2 decades to a whopping 2,300 crores. Just for perspective, what was penciled in as a loss for this quarter was about 300 crores. But the focus today is not about the IndusInd losses or its balance sheet. It's about the regulatory nature of this suspected fraud and perhaps the involvement of people working within the bank. It's about the system, the auditors, and the board of the bank. Do they hold no responsibility for a possible fraud that has taken place under their very noses? The other key question is about the top management who has recently quit, the CEO, the CFO. Is it enough to merely step down, or is it now time for central agencies to enter the investigation? This is how serious the matter is. Yesterday, the board pointed to an internal collusion between senior officials, former managerial personnel who overrode key internal controls, which may have led to the fraud. Not just that, the fraud has been concealed from the board and statutory auditors who claim they were kept in the dark. So the big question is, how did the IndusInd fraud go unnoticed for so long? Before we move to our conversation with top experts who understand the space inside out, let me go across to my colleague Vishwanath Nair, who's been tracking this story right from March. And Vishy, I think we can take credit today that we broke every bit of this story, and we didn't buy what the management and the promoters were saying at face value. We questioned it. Give us the timeline of how all of this has unfolded since March.
We didn't buy it, and I continue to not buy it. But let me take you through what the timeline of events is like. Now, all of this, of course, started on the 10th of March 2025. That is when the bank's top management, the CEO and the deputy CEO, both came on a conference call with analysts and said that they found discrepancies in the derivatives trading portfolio and that the financial hit because of these discrepancies was close to 2,000 crore. The bank also said during the call that they have appointed an external agency which will verify whatever they found through an internal check. Now, cut back to March 15th of 2025, if you can imagine, in these 5 days, obviously a lot of panic spread across the market, and depositors started pulling funds out of the bank. So the RBI had to come out with a statement saying that the depositors are safe. They don't need to be concerned so much about the issues that are happening at IndusInd Bank. The issues are currently being dealt with. Depositors can stay put. Then on the 20th of March, the board of IndusInd Bank said that they are constituting a fresh investigation. Remember that the management had already appointed an external agency to verify internal findings. This was a next step, appointing a fresh agency to look at the entire issue, find out the root cause, and also assign accountability in this entire matter. That was an important move by the board. Of course, it came significantly later than what was expected. Then a month later, on the 22nd of April, the bank discloses that we have found additional issues in the microfinance division, in the accounting. Specifically, their internal audit team was looking into these matters. EY was an agency that was helping this internal audit team. 5 days after that, the bank has had to come out with a notice saying that the external investigation that was constituted by the board is now complete, and that the financial impact of the derivatives issue was about 1,960 crore. Then the following day, essentially on the 28th of April, what happens is that the Deputy CEO, Arun Khurana, announces his immediate resignation. He says that a lot of things happened under me. I was leading the Treasury Department, so I need to step down. A day after that, on the 29th of April, you had Sumant Katpale, the MD and CEO of the bank, step down, saying that under my watch, a lot of omissions and commissions have happened. I will take moral responsibility and step down. Till this point in time, everything goes swell. But then, on the 30th, again, so apologies for that, 30th on April, the bank says that a committee of executives is going to run the bank. That is an important sort of development. But yeah, on then May 9th, the bank comes out with a fresh disclosure. It is saying that we are investigating insider trading allegations against former management personnel. This was Sumant Katpalia and Arun Khurana, who had now quit. Then again, on the 15th of May, more disclosures come out saying that, remember the microfinance issue that we found out? Well, there's a 674 crore accounting gap that we found, incorrect interest income being booked at the bank, and that is a problem. Then again, in the other assets and other liabilities department of the bank found unsubstantiated balances of about 595 crore, which was also a problem. Both of these issues had been adjusted as of January. That's what the bank said. But of course, these are still issues that were continuing. All of this then brings us to last evening, which is when the bank came out and said, considering all these investigations, considering the reviews that have happened, we believe that there is reason to suspect a fraud has been committed against the bank, and that the people involved include senior officials at IndusInd Bank, as well as the former managerial personnel, which is Sumant Karpalia and Arun Khurana.
Okay, so you've laid it out beautifully, and which is the fraud bit we don't know yet. We know that something doesn't smell right here. The question is it enough to say that we're cleaning up our books, now we'll get a new guy in place and everything will be well, nothing more to see here, please move on? That's really what we're asking. Dinesh Kumar Khara joining in, he's former State Bank of India chairman. Dipali Pant, former executive director at RBI. Hetal Dalal, president and COO at IIA. It's an investor watchdog, and of course Abizar Divanji, founder at Neostrat Advisors LLP. Welcome to all of you, and thank you so much for your time with us here on The Big Question. Mr. Khara, I'm going to come to you first. What do you make of this affair at IndusInd Bank?
Well, it is something which is a matter of concern, but of course it's a very clear reflection that the MD and CEO, who was a very integral part of the board, was expected to have enough controls in place, and such kind of things. First and foremost, these are the procedural issues. These procedural issues should have been tightened by the management itself, and of course that is the role and responsibility of the CFO, and of course the oversight is of the internal auditors and the external auditors. But what I gather that the auditors have said that they have not been shared the required information, but I think they could have probably gone beyond, and in fact that is invariably the situation. Invariably the auditors have a test check when it comes to they're certifying the correctness of the books. So this is something which is expected of them. So now the board, having said that, they are in the process of identifying the gaps and will be strengthening the processes appropriately. This is something which is stated by the board. So I think, of course, the other piece is that this was reported, derivative issues were reported by the management themselves, and something which is a very clear reflection that they understand that what the implications could be, and they have reported. But nevertheless, the damage is something which you have seen, particularly for a bank of this size. The kind of course, they have got a fairly strong balance sheet, but nevertheless, they have got the losses which they have absorbed in this quarter. That itself is a reflection that there is a need for tightening the processes within the bank, and also to have a culture for compliance, which is very essential. Respect for compliance and a culture for compliance, which is essentially nothing but the tone from the top, which is something which is always, it actually defines the culture of the organization also. So to my mind, that is something which should be required.
You know, what comes to mind is that this is a sector which is so tightly regulated. I mean, it's a large private bank which has crores and crores of depositor money. Dipali Pant, I'm going to come to you on this question, ma'am. This is a sector that's so tightly regulated that it's mind-boggling to understand how this all went on. Because remember, the first we heard about it is some discrepancy in derivatives trading. And now it turns out there's much more, and we don't really know if this is the end of it.
Yeah, Tavanna, this is something really very grave, I should say. And you see, the Reserve Bank, the statement by the RBI governor stemmed a confidence run on the bank that everybody is aware of. And the RBI inspection report had also pointed out that there were considerable weaknesses in the internal systems of the bank, but the bank went on its merry way and those were not addressed. This also points to the fact that now it's very essential for us to adopt Ind AS for banks, because Ind AS has specific accounting norms which ensure that this kind of thing cannot happen, because a derivative transaction is either an asset or a liability in the balance sheet. Or if you're adopting hedge accounting, then you have to take it as on the date when you hedged it. And you cannot do hedge accounting as the IndusInd Bank was doing internally. You have to have an external agency for it. It is also very shocking that in the entire Treasury division, there was no concurrent, no external validation of the trades that were taking place. So there is a complete failure of governance, and I'm sorry to say, of the board as well. And I'm always reminded, Tamanna, of a Latin proverb I'm very fond of, which is qui custodiat ipso custodes. Now, who's going to guard the guards? If it is a leadership failure and a governance failure, to say that it's just an accounting failure is taking it just too lightly. That there was a disclosure of divergence in asset classification and provisioning as the bank would like us to have it is simply not enough. As of now, there is a very uneasy calm that prevails, but a reassessment of IndusInd's economic prospects show me very clearly the outlook for the bank is very negative in FY26 and 27. And just because they have enough capital adequacy or NPA provisioning doesn't answer the question of the governance failure.
No, so one is governance failure. So there's ineptitude and there's malintent. I think we need to start distinguishing what we're seeing here exactly. Abhizar Divanji, just on the question of the board and the auditors and their responsibility. Today the auditors say, I didn't have enough information. It's pretty much whatever's left of that same board who's going to find a new MD, isn't it? Does that sit right with you?
No, so when you talk about the relevant responsibilities, Tamanna, first of all, it is the management's responsibility, and I will link this responsibility to the trickling of disclosures that happened over time. So we had the management which was clearly responsible and should have known all these issues any which way. even if it was a malified intent or a oversight or whatever else. So at the end of the day, I think the management was clearly responsible and should have known these issues. If the management says that they did not know of those issues, then that is, I think, a graver problem. So, and that is linked to, we had the CEO come on TV and say, oh, we have this issue and we are going to resolve it. And nothing beyond it, and saying that, oh, RBI may not have liked me, so my term has not been extended. The disclosures were limited to that.
Abhisar, I almost forgot about RBI did not like me, so that's why my term was not extended. It sounds very rich now in hindsight.
Right. And then, so the first line of defense is the company. The second line of defense is the independent internal processes which then report into the board. So that is the second level of failure, where we did not have the internal audit function identify this on a concurrent basis and report into the board. And this is what clearly the chairman of the board said yesterday, that, we were not, some of these issues were not brought to our notice and there was an internal audit failure. And he has hinted at some kind of a collusion within the bank and there will be an investigation. But having said that, I think at the board level, there is enough and more supervision. And I have said this in the past that, thank God that RBI appoints the CEO. Because if such an incident in a non-regulated entity would have gone unnoticed and the CEO would not have been sacked. So what has happened here at least is that the CEO has been forced to resign because of external forces coming in. Ideally, the internal forces should have worked. And the third level of defense is then the auditor, in my opinion. So I think we have to get that very clear. We tend to move to the auditor at the first instance, but there is lines of defense that come about. And then the other thing is that not everything is a colluded fraud. For example, if you talk interest income, these are system generated entries.
Yeah.
Correct? So obviously there could be a systemic flaw. That is also an important thing. The derivatives issue.
Abhisar, the word fraud has come from the board.
No, I understand that. That's what I'm saying. That when the word fraud has come from the board, I think one needs to be cautious as to how that fraud is kind of linked to a series of events where people have consciously done things. That is a fraud. Now, to actually establish that and say that you've done this, I think is in a way, some part of the bank, including the auditor, may be shirking responsibility somewhere and pushing the blame on a few. Again, the idea is that it may or may not be a few. It could be a systemic issue. It could have been lines of defense being broken. And those lines of defense being broken actually is a very significant, impact. And that is what actually forms opinion and perceptions about the bank. Like one, and I know you will head to the investor side soon, but one big investor had told me once that while majority has control, minority governs perception. And that's what's happening here.
I think perception, I don't know about perception. I mean, stock was up today, so that's a whole different story of what happens in the markets. But Hetal, perfect segue from Abhisar to you at this point. Affixing responsibility and discerning the difference between culture of non-compliance, etc., and malified intent. One part could be that everyone on this board or a lot of people on this board were just bad at their jobs. And the other could be that there's something fishy cooking here. Because for a management to come and say on a call that there is a suspected fraud when they don't really want to reveal that much raises massive red flags.
Yes, actually, if you hear the call, the chairman of the board also said that there were senior leadership which sort of allowed the breach of internal processes and systems. And therefore, to that extent, I think there is clearly some questions to be asked in terms of what roles were played by employees. Now, leave aside IndusInd Bank, you just look at fraud very dispassionately, right? It really cannot happen without the connivance of certain set of employees. Depending upon the size of the fraud, you would argue, what levels those employees are. But in most instances, you will find some employees sort of tending to be involved. So if the board is saying that there is an issue of fraud, you're likely, and the board has actually said that some employees and ex-employees are sort of involved in this entire piece, then this is certainly something that needs to be investigated. More so, if you call it a fraud, there's really going to be more oversight and more layers of investigation which are going to come in. I think the question really is and I'm with Abhisar in terms of saying that there is a first line of defense, second line of defense, and third line of defense. A lot of this is internal, right? There's a failure of the internal audit system itself. And the question, therefore, as Mr. Khara rightly said, is how are you strengthening the internal controls and systems and building a culture of compliance? So, one of the big things we keep saying, right? Culture eats strategy for breakfast. Well, culture eats most things for breakfast. And therefore, it is the board's job to also examine what is the kind of corporate culture within a particular entity or in the company that they are on, and see how some of these things can be addressed.
No, so let me come back to you, Mr. Khara, on this point of what next. The regulator, I mean, some saying today maybe the regulator needs to come in with a broom at this point. Yes, by the end of June, the board will come with its names and some names doing the round. But the idea that one person will come in and then clean up the whole system and that will be a fix, do you think that that's going to be enough? What is the path that you would like to see ahead? Because at the end of the day, it's not only about IndusInd Bank, it's about faith in the Indian banking system, which gets shaken when things like this happen. That's the bigger issue.
No, I fully agree with you, and that's why I made this statement that the tone from the top will be something which will be defining the culture in the organization. And from that perspective, the new CEO will have a huge responsibility on his or her shoulder. Because one, of course, they will have to identify the gaps which are there in the processes. We'll have to fix those gaps, and also at the same time, they will have to bring in the some kind of a responsibility in terms of this non-compliance. That is the other piece. And going forward, how should they avoid such kind of occurrences? Which also means that strengthening the internal audit processes significantly, reporting structure to the audit committee also getting into some kind of a test check. And similarly, when the external auditors come, they will also look at the test check. The very important part, which is essentially relating to the MFI and also the interest income being booked for some of the and non-compliance with the IRAC norms, that is nothing, but it should be, it actually warrants a review into the accounting system. How come such assets be identified as performing, whereas in terms of definition, it should have been non-performing? And similarly, booking something as a fee income, it is nothing but a very clear defiance of the internal processes and the guidelines. So I think it actually requires a complete and thorough revamp into the systems and processes, and also identifying such systems and processes which has led to such kind of lapses. So I think this is quite a comprehensive job which is required to be carried out by the incoming CEO and the management of the bank.
I mean, don't envy the person who comes in, quite a bit of a cleanup. Abhizar, do you see going forward liability on management who has stepped down? Because simply quitting and then saying, oh, I take moral responsibility may not be enough in this case. We don't know where it'll go, but the moment the word fraud has come in, do you think an investigation is warranted?
If the fraud happens, then I think it's going to be the responsibility of the audit committee and of the board to actually investigate that fraud, and the people who are responsible for that fraud be brought to light. And if it is the ex-employees, then clearly the ex-employees will be held accountable for that part of the work, for sure.
In criminal investigations, I mean criminal investigations. It's time for central agencies to come in and look at what's happening over here.
Sorry, but to be candid, criminal central agencies don't have an excellent track record of turning things around. But I would say that effective investigation is important, and so that a matter is brought to an end, so that IndusInd can start off with a cleaner slate. I think that is more important, and that should be the focus.
So Hital, do you agree with this? Saving IndusInd right now is more important than bringing those who have done this to book, or are both important from an investor perspective? Is it enough for the same auditors and the board that missed all of the red flags to conduct this investigation, decide who comes next?
See, I think it's a little bit of both, right? I think, yes, the bank primarily needs to rebuild its confidence in investors. I think that's clearly shaken. And therefore, there is a great focus to figure out how much they need to clean up and get on. Now, the board has said at this stage that they're starting FY26 with a clean slate, and all the issues around accounting and fraud have been sort of booked into FY25. But I don't know whether that's really the end of the series. I think what we are going to see is new leadership come in. Most likely you're going to see an external, RBI is most likely going to get someone externally to come in, and you're hoping that you're going to see someone who's straight-jacketed, who'll tighten the systems, sort of follow the rules and responsibilities, and basically get the ship together. At this stage, I think that from an investor perspective, that is important. You have to understand that all of this is not going to happen quickly. You're likely to see the bank just slowing down because it's going to be far more inward focused, at least in the immediate term, as new leadership steps in, just trying to get the ropes together. And therefore, from an investor perspective, trying to build that entire confidence back and getting back up and running is to my mind a priority. Yes, you do have to address the issues of the past. It's not that you can sort of walk away and say we've got a fresh start, and therefore the external investigations, given that these will be independent and you still have RBI oversight on this entire issue, should bring to light what are the sort of how many people are involved and what the elements of causation are, and therefore appropriate action should be taken.
Dipali Pant, if I may get your perspective on this, what needs to be done to bring back confidence in this whole issue and understand what really has happened, the culpability of those on the top who were running the bank while all of this was happening?
Well, Tamanna, I have a rather straight-jacketed regulatory view in this. Ideally, of course, you need a new man. You have to ensure that your systems and processes are in place. But I would also like to look at the culpability of those who created the whole mess in the first place. And I'm upset that they would be allowed to go scot-free. I mean, simply saying that now I've told you there's this fraud, there's this gap, I don't know anything about it, does not work. As far as the auditors, the whole definition of audit, A is for, analyzing, understanding, deducing, and then having some kind of an intuitive understanding of the patterns which you're seeing, and then tracking the transactions. And if a good auditor cannot do that, then the auditor is not required, because that is the objective, and that is why external auditor is hired. After a bit, I think RBI should also be looking at all other banks so that there is no replication of this. Because you see, Tamanna, every system is only as strongest as its weakest link. And if banking runs on trust, now if people lose trust in foreign banks, in private banks, in banking as such, then there are a lot of people willing to come in, and there is already a lot of disintermediation happening. So this is a death knell, really, and I would have superseded the entire board, and also taken.
I just also want to quickly get views on that point. Should the entire board be superseded? Just Mr. Khara, your view on that?
Well, I think unless and until we really know that what responsibility is, because board eventually gets guided by what the MD and CEO will say. But yes, of course, board had a responsibility beyond that also. They could have, because when it comes to the audit committee of the board particularly, they interact with the executives of the bank. And when they interact with the executives of the bank, then they should have been in a position to assess what is the level of the compliance and how correct are their accounting reporting. Well, I think for me it is a bit premature to say that the board should have been superseded. But nevertheless, if at all they are found wanting, then of course. But as of now, I would not be really getting into that stage.
Okay, Abhizar, your view on that point?
I think we don't know enough.
Okay.
Depending on what the issue would be, causes for horses. Take Yes Bank, for example, they did change the whole board because that was the gravity of that situation. If the gravity of this situation is similar, that will happen. If not, I think appropriate action.
Yeah, but you know what, the astonishing part is this has gone from a derivatives accounting discrepancy to a problem in the MFI book to micro lending to NPA not being accounted for properly to fee income. So it seems to be spreading. It's not just one thing deepening.
So I think one will have to get to the bottom of it, Tamanna, and then decide who are the people which need. There will be gaps.
Yeah.
And the gaps will be identified across the chain. And those changes will be changed. It could be the statutory auditor who may have to be changed. Who knows? But that would also happen.
I don't see how the same auditor can continue beyond a point. I mean, we'll wait and see. We're watching the story very closely. A band-aid right now on a gaping wound, saying, okay, here's the new guy, he'll fix everything, might not be enough at this point. But thank you to all of you for joining us on this conversation. I've run out of time. IndusInd Bank in focus. What's also in focus is the way our banking regulations run. What's also in focus is the top brass of IndusInd Bank. And can they really say, oops, this was a mistake? Well, that's all the time we have on the big question, but stay tuned. A lot more coming up on NDTV Profit.
Do you really know the company you invest in?